Our food supply is so important, yet it's so fragile, and we have seen all of the problems come up since 2020, and this has not let up. Here we are, 2 years later, still the same issue. In fact, it's gotten worse. We are now at the highest food prices we've ever seen in history, and yet the longer it goes on, the worse things will be. It's having a compound effect. I'm going to show you what's going on here, what the IMF had to say, what the inputs are into food, what makes food go up in price, and then we'll get into the other aspects. Let's begin by taking a look here. Harsh winter could leave social unrest in Europe. This is according to the head of the IMF. There is certainly fear of recession in some countries, or even if it is not a recession, that it would feel like a recession this winter. Quote, and if Mother Nature decides not to cooperate and the winter is actually harsh, that could lead to some social unrest. She says some social unrest. Now, what I am here to tell you is that what we are looking at is unfortunately going to be a harsh winter, going to be a harsh spring, going to be a harsh summer because of what's happening with the weather patterns, because of what's happening with the interest rates, and because of all of the inputs around this. I'll give you all the data that you need to know. So here we have U.S. shale bosses telling Europe there's no bailout coming. Executives say that they cannot increase oil and gas supplies in time to stop the winter energy crunch. So for a lot of people, that is a big concern because you look at this, and of course, it's not just shale and it's not just in the United States. I mean, you look around what's been happening. There's been a difficulty, to say the least, with energy, and that has really been a compounding impact on food prices and generally what people have to spend. Quote, it's not like the US can pump a bunch more. Our production is what it is. There's no bailout coming, and not on the oil side, and it's not on the gas side either. So we have this in a time in which prices are elevated, and you would think that they would get this going and they would try to get more on, but it's not so easy. This is something, when the process of fracking, and I've said things about fracking before that I think it's a concern, but anyway, that's a different story. What we look at right now is the fact that they cannot do this at the current prices. At least that's what it seems. And on the other end of the spectrum, you see Occidental Petroleum, which is one of Warren Buffett's big investments, that he seems to think so because they operate at around $40 a barrel. They start to be profitable for many of their, where they're digging up. So looking at that, it gives you kind of pause because you wonder, is it just one company or is it the industry as a whole? And obviously there's going to be nuance. Right here, we are not adding or drilling rigs, and I don't see anyone else adding rigs. So what do you think that does to the price of oil? Obviously, it's going to have a severe impact. Prices are soaring everywhere, from beans in Brazil to pork in China. And you don't need me to tell you this. You have seen it for yourself. This has been over and over and over again where we have watched these cases expanding. They're just going on. But what does it mean to you, the individual, and what are you going to do about it? At the end of this video, I'm going to talk about the solutions. So definitely stick with me. This is an article here. If you want to take a look through, it's actually quite interesting with that graphic that they have going on. But you can look further in. The world has a $1 trillion La Nina problem. And essentially just the weather patterns, these weather patterns, the way they're moving, it looks like we're going to have this weather continuing. So that's not going to stop. It's not going to change around, and things are cooler and things are wetter and things start to ease up. It looks like this could happen again. So we don't know. Of course, the weatherman is often wrong, even on the day. How often do you check the weather and it says it's not raining, and then it's raining, and then it's the opposite way? I mean, it's crazy. But this is just showing us that apparently we are in for more. And that's not good, because we can't deal with that right now at this time. So these are the input costs, some of the input costs. And this is showing us natural gas, fertilizer, and coal. And, they're within a range. This is from January 2017 up until now. They're within this range. And then suddenly, in 2020, it skyrockets. And this hasn't let up. So you see this chart here? Okay. And all I wanted to highlight was the fact that if these input costs are higher, if you got to pay people more, if the equipment is unavailable or it's more expensive now, you're buying a tractor, you're buying this and that, all of these things make the food prices higher. And so what do? Well, there's a limit into what they're willing to pay. So the farm will say, okay, supermarket chain, we're going to sell to you. But that supermarket chain says, we can't make a profit if you're going to sell it to us at this number. So you got to bring that down. They say, well, I can't. I'm going to lose money. So they say, we're just not going to grow. And that's what's happening today in many instances. Think about how scary that is. The farmers who we rely on every day, they're not going to plant as much. They're just significantly reducing what they plant, or they're changing crops. They're planting, instead of stuff that you and I want to eat, they're planting soy. Why? Because that soy could be ground up and given to the pigs and given to this and that. They're not actually giving food that people would want to eat, but I guess that's a judgment. But anyway, looking here at the next aspect. Here we have it. I mean, this is FedEx CEO saying that he expects the economy to enter a worldwide recession. Now, by the time you're watching this video, I'm sure all of the others have already mentioned this to you. You've seen it for yourself. But I think it's significant. And why? Why do I bring this up? Well, I can show you here. Something that he said, which I think is really key, okay? So he's saying, like, nothing he said in this interview was good, by the way. And what he said was this. We are a reflection of everybody else's business, especially the high-value economy in the world. That line there really tells a story because you have stuff moving around. And this is why FedEx tends to be really important. They use it as a leading indicator because what happens with FedEx tends to follow, if you look at the PMIs, for instance. Okay, you look at manufacturing and what happens. You look at industrial output and what happens. You look at other factors all adding up. This happens to be just one of them, okay? So that red line there, that's FedEx stock. And you see this is only from 2020 up until the present. Comparing that to the PMI. There's a global PMI. And essentially, kind of in a way, it's like how much output is there versus what the FedEx stock is doing, and they do relatively track each other. Except we're now seeing FedEx stock fall down and down and down. They're falling off the cliff. So is that what we can expect for the output as well? So essentially what he had said, the CEO, is that this is looking terrible on all fronts. We do not see what we had before, less shipments, less this and that. So that's never a good sign. Okay, because we're getting that indicator. It's an indication. It doesn't tell the whole story, but it's certainly an indication there. So what are you going to do? Well, in many cases, people are simply over-leveraged to equities, and they never backed off. They never took that cash or that leverage that they had, depending on how they were doing it, and they never put it somewhere where they thought it would be safe. They said, you know what? It's never going to happen. The stock market will go down by 10% and the Federal Reserve will just turn around and print money. Then the stock market went down by 15%. They said the same thing, 20%, same thing. And now the belief is still there. Why? I'm not sure. Ray Dalio does the math. Rates at 4.5% would sink stocks by 20%. Is this credible? Well, if you look at the models that he develops, they're generally very well thought out and they make sense. And he's worked with a lot of the central bankers and people in China's government and US government and Europe's government, all these different things. So he knows what they're going to do before they do it, and he knows what could happen as a result. Do I take every word he has to say and believe it's the right thing and all this stuff? No, but if you read the principles books, I mean, they're really good. Okay, anyway, I just wanted to bring that up because I'm going to show you this. If you look at what happens here, from comparing today's stock market with what happened in 2008, 2009, we still have quite a while down to go. And the bottom here, in this instance, would be somewhere around October. Okay, it's going to be somewhere in that region. According to this, we shouldn't take that in. okay, because we have no idea what's going to happen. I think what is extremely important is that we compare not 2008 and 2009 because, oh, it went down by this percent and, took this many months. These things are not, in my opinion, not really relevant. Maybe the algorithms use that somehow in their trading. We need to look at what the Federal Reserve is doing. Well, number one, with their balance sheet, which they're accelerating their quantitative tightening this month. What does that mean? They are now winding out of their balance sheet where they have mortgage-backed securities and treasury securities. So they got all of this debt and they bought it up. And now that stuff expires. It's constantly expiring. So they would normally buy the same amount and keep it roughly flat, or when they were expanding, they would be buying more every month as it expires. So now what's going on is that they're allowing that to expire, and they're doing so at a rate that was much faster than what we saw before. So they're doing this, quantitative tightening, and they are increasing their interest rates. So as you watch this video, next week or this week coming up, you will see the FOMC meeting. Does the Federal Reserve increase at 75 basis points? Does it increase at 100 basis points? I believe 100 basis points shocks the markets. 75 basis points, hey, we got it, we expected it, this is what it is. Market's starting to already price that in. 50 basis points, hey, the Fed pivot's coming, markets rally. That's my expectation. We'll see what happens. And then we have this. It's just showing us right now that there historically are a lot of puts. Puts are basically bets that the market will fall. So, the last time we saw this many puts, it was in June, and that was kind of the market bottom for a little while, and it rallied after. Could it be the same? Different story? Who knows? I think really the markets are waiting for what the Federal Reserve does this week. I think that is the key indication, so pay close attention. Now, food insecurity, because that is the big issue here. What do we do about it? What do we talk about? Well, I have some points that I wanted to make, and I wish more people in this space will talk about it, because people need to be aware. Is the area that you live in prone to weather events? Why aren't people talking about this? Like, why is that not a factor? If you live in an area that's constantly getting hit by tornadoes, and your neighbor's house got taken away last year and the other neighbor's house got taken away the year before, do you not think that that could happen to your house at some point? I mean, we need to be aware of this. Are you in an area that's prone to drought? This is very worrisome, okay? You hope things will get better, but are you simply just, waiting and seeing? I mean, it's a big concern. Next thing is, do you have preparations in place for food? What are your preparations like? Most people would say, I got nothing. Do you have a backup plan sorted out? So if everything fails, everything you're doing, your job, the economy around you, if crime goes up significantly, there's drought, a tornado took the top of your house off, all these things happen. What's your backup plan? Do you have one? I hope so. And do you have a plan C? Okay, that's really key. It's that far-fetched plan, probably not going to happen. You probably never need it, but just in case, I'm going to do this. And I've done 1, 2, 3, 4, 5. It's ready to go. I don't hope I never have to do that, but this is my plan. Okay? And if food prices rise by 2 to 3 times from today's prices, what will you do? So are you going to go hungry? Or have you already figured it out? Because I think people should be prepared for prices to go up 2 to 3x from this point. Is it going to happen? I have no idea. Does it look like they can increase from today's prices? Yes, absolutely. Absolutely. Whether it's, a little bit higher or triple, be aware and be prepared. That's all I'm saying. Because what has happened here is that with interest rates rising, they're trying to slow down the economy. Hopefully they do slow down the overheating with the asset prices and so on. But what's really key is that we do not go into a big depression. That would be terrible for everybody, because you start getting mass layoffs, then people cannot afford the food prices, which have risen all the way up to the sky, and the same with electricity prices and so on. So for people, please be aware of this. Take what I've said here, try to use it as best you can, have your preparations in place, and I wish you well. So if you found the video informative, you've got to be one of the subscribers. Hit that button down below, hit that subscribe button before you go, and I'll see you on the next one. Take care.